Thanks everyone for joining us today for the Fall of Probuild. I mean, who would have thought? We've seen a number of high-profile builders over a period of time, and I think when this came out last week, there's been many of us who have probably seen some of the issues and challenges that have been happening in the construction industry. The Fall of Probuild, and there is a bit of history, I guess, that's been going on with Probuild over the last 2 years, but we really wanted to pull this kind of webinar together to kind of say, here we are now, what can we do as small business owners? What can we learn from the Probuild situation, and how can we really look at protecting yourselves going forward? So feel free to put any questions through just use the Q&A is probably the easiest. If you put any questions through, we'll probably go through a lot of those questions at the end. There might be some that we'll cover as we're going through the session, but feel free to ask any questions as well. So just to introduce today's presenters, myself, Shannon Smith. I think I've probably met about half of you that are on the call today. I guess I'm often called the accountant that builds. I did actually, a fun fact or a secret is I actually did want to be a builder. My family's all in construction, and my dad said that the industry wasn't ready for me back then. He was probably right, but I still enjoy the construction side of things. So I have done a number of developments over the years. I built my first house at 21. The most recent commercial development, which was back in 2011, was actually our office building. So I really enjoy working with those within the sector, and I do understand the sector really quite well from that perspective. I also do have, and I guess this comes to the benefit of a lot of my small business clients, is that I do work with 4 of Australia's top builders and do a lot of their international tax. And what's interesting about working with those top builders, fortunately Probuild wasn't one of my clients, some of their peers are, is the fact that actually what you see as issues at the big end of town, they're actually similar at the small end of town. Also, even with some of the tax implications, some of the accounting, the only difference is there's an extra zeros when I'm dealing with the big end of town, but you actually do have a lot of the same types of issues and challenges that you're facing as well. Joining me today, Paul Cunningham. Probably a good half of you have met Paul as well. Paul also has a big focus on the construction industry, working with a lot of our clients in that, and has had a lot of fun over the years with the ATO in going through some of the challenges that the ATO has tried to raise on that. So we're going to go through today. Agenda today, we kind of pulled this together to think, what are the implications for our clients, and how can we help you to make sure that you're as prepared as possible, and that there may be some shaky times coming ahead. How can we help our clients to make sure that none of our clients are fall into this type of situation? I want to talk a bit about the rise and fall of Probuild. What are some of the key things around there to kind of set some context around it as well. We then want to move on to looking at the required mindset in these difficult times, because I think there have been a lot of challenges that are actually coming out now. We don't have the government support, and we have had a rough start to 2022. How can we go about getting paid? And then what are some of the lessons that we really can take into the future, and some next steps? And then we've got some time for some questions as well. So really looking at the rise and fall of Probuild. Now, some of you may be aware of some of these issues. You're probably experiencing them every day as well, but really having a look at, it was what's come down to Probuild, and I think a lot of this relates down to small business. I did actually reach out. I did a bit of homework also before this webinar, and I did reach out to the CFOs at some of these larger construction companies also to get their more than 2 cents. It's actually quite valuable information on what are their views now that one of their direct peers has actually, had this fallen situation. The other interesting thing about Probuild compared to many other companies as well is that it is foreign owned. And normally when we're looking at the international space, often a foreign parent, a company that won't let their subsidiary go under. Let's, for example, think of Nike. Nike would probably never let their Nike Australia go under and go bankrupt. They'd always come in and support it. Why is this a different situation? Well, Probuild isn't really a brand, I guess you could say, in South Africa. So I think there's kind of a segregation that they're not as concerned about. So what were some of the issues that ProBuild really were experiencing? And I guess it came about with, the government's hardline approach to managing COVID through, a combination of, as we all saw, border restrictions, snap lockdowns, and mandatory work from home regulations. So ProBuild is very much, I guess, what we call a vertical builder. They do a lot of the high-rise apartments and the office buildings as well. So you've got, especially with this working from home, you've had buildings being in progress from that perspective. They may have had tenants potentially lined up, and some of those may have actually changed. We've also seen a lot of supply shortages as well. I'm sure many of you have been experiencing that, and that's been happening as well across the big end of town as well. Contractual issues that may not be, for a lot of you that are maybe dealing in other types of construction, what ProBuild had is also a lot of contractual issues like the big company that was going to lease the building is no longer going to be signing up the lease. So basically the developer doesn't have this lease already set up, or if they're developing it for a particular owner, they don't already have these leases already in place. That causes then actually rolls into some of the financing issues. And I understand that that's been a key issue in Sydney and in Melbourne with some of theirs, that they thought they had buildings fully leased from a lease office perspective, and some of those have started to fall over. That happens, you have issues on the financing, and then it tends to unravel a bit from that. So that part probably isn't as relevant for some of our clients, but is something that what we're seeing. What has happened is we have actually $5 billion in commercial and public sector projects that are in jeopardy, including a lot of local projects. I was speaking to the CEO at the Mornington Peninsula Council just last Thursday afternoon, so literally 24 hours after it happened, and they said they've actually got a number of projects that were in progress. I was speaking to the CEO at the Bays Hospital. They've got actually a number of their projects. Rosebud Primary School, apparently 2 weeks off finishing a big gym, and all of that, and now they've all walked off. So, and we're talking about 750 employees as well. What happens now with all of those construction, everything stopped work. And when you look at it, a company as large as ProBuild, when it collapses, it's just going to send ripples down the supply chain. And if you look at the construction industry and the way that's going to kind of filter down, you've got the subcontractors, what are they going to get paid? Some of those wouldn't be able to afford some of their, when the lost income that they're not going to get as a result of ProBuild going under. So what I tried to kind of look when I was looking at this is, okay, what's this really going to mean from our local construction industry? Where am I expecting that this may have some of the impact as well? And so the pandemic and I guess the threat to the construction industry, we've still got the big supply chain delays. What we are seeing as well is the soaring price increases, whether it be supply chain issues or even the result of inflation, or actually a combination of both. We have got a lot of labour shortages from COVID-19. I wonder if this situation with ProBuild may mean there are some more subcontractors that are coming on the market that were working on certain jobs and don't have that. So there may be some opportunities there. But we are seeing a lot of labour shortages across small businesses everywhere, really struggling to get people on board. And then the other big thing that we're seeing a lot is the insurance limitations and the inability to increase. So you've got linked with the bottom bullet point as well, council and other regulatory delays. You've got a delay on council, you might have a house signed up, and you may even be in the progress. Maybe you're actually going to the council for something in relation to the flood, the flooding and getting that signed off. Well, that should normally take only a week. With the council, it's taking 14 weeks at the moment. You can't take on another house build because you've actually capped yourself at your insurance. Now, the concern I have on the insurance limitations is when you have an company like ProBuild go under, it's going to have all the insurance companies a bit shaky. So I think we're going to see builders having a struggle in getting their insurance actually increased as a result of that. I did actually last week, as I said, speaking with the Mornington District Council with the CEO and also with their head of planning. to really express to them the concerns that we have and the power that they have to actually help as a result of the planning and the regulatory that they can influence in the construction industry locally as well. So there are a lot of these types of areas, and I think many of you are probably feeling a lot of these things. I did want to link this through to kind of give you an overview of, you know, you hear people saying, okay, there's some companies going under, you know, and we've got ProBuild as the first example. I did actually look up the data through ASIC, so nationally, just to give you an indication, between July and December, 565 companies were actually building and construction. So 25% of companies that went into liquidation. And when I say companies, that can be the smallest of companies to the largest of companies. In the last few months, there's been 100 building and construction companies in Victoria that have actually gone into liquidation. And the local construction industry is also under pressure. I know of, and I think we're at 4, maybe 5 now, Paul, that we know of, fortunately are not our clients. Unfortunately, our clients have actually been the recipient of these builders going under and are not going to get paid their money. So I've seen that just in the last, I think, 6 weeks that we've started to see that. And I think we're going to see a lot of that, unfortunately, coming through. I wanted to put some context around it because I think that's one thing, especially those in construction. If you speak to anyone else, you know, we've all been locked down and they weren't able to work and there were a lot of challenges. I think there's a lot of people that say, oh, but the construction industry should be fine. You got to work through COVID, except for those 2 weeks. The impact, and I guess this is just actually extracting in a sense, by industry on ASIC. I just wanted to give you an indication, and these are the companies that have gone into liquidation. Obviously, accommodation and food services, you can see there's been a lot, and it's only got more and more. It's increased since July right through to December. But have a look at the construction side of things. We had, you know, back in July, 72, and this is nationally. So when I was talking before about 100 in the last 3 months in Victoria, that's actually a huge, you know, when you look at, we've got, say, 244 in November and December. The 100 was in November, December and January, 100 in Victoria alone. So we're talking about a lot, and you can see the increase coming through. I think a lot of this is coming from not having, there's the cash flow, because cash is always kind of the king, I guess, when you're looking at business, but you're having the cash flow challenges, you're having the delay, the supply challenges. We're hearing from clients even where they're booking into, they're saying they're getting to a certain stage completion. They're saying to the client, they're issuing the invoice and they're saying to the client, look, we want to get paid. The client's actually going to the bank. The bank's taking a few weeks to come out and actually go assess it so they can get their payment through. So that's just to give you a bit of what we're seeing on what's happened with ProBuild, what were some of the triggers, and how do we think it might relate down to our local and small business. I'm going to pass you on to Paul just to go through and talk a bit more about the mindset and what can we do. That was all the doom and gloom. So I'm the depressor tonight, and Paul's going to be the happy one to say, okay, these are the facts, these are the issues. What are we going to do to help us get through it?
Yeah, hopefully we can find some strategies to help everyone improve their data management. So just want to start off with, thanks for that, Shannon, just want to start off with sort of 3 mindsets to get us going in the way we're thinking about our approach to our debtors and our clients. And I guess the number one thing is, I mean, we obviously want to be empathetic, but probably the number one thing I want to get across today is that we need to look after ourselves first before we look after our clients and others around us. So the analogy we used, if you attended our webinars during COVID, the analogy we often used was the airplane masks, where you're always told to put your own airplane on mask before helping others. And I think that's still true in business and in managing your clients and your customers, to make sure that you look after yourself and your business first, so that you can still be around in the future to continue to help your customers and clients the way you do now. And that's really important to remember. So yes, being empathetic, and we want to have a heart, and we want to understand our clients' issues and talk through them and do the right thing by people, but we need to have a backbone as well, and make sure that we are strong and we continue to be strong. Our businesses continue to be strong for the future. And the other thing I want to talk about is it's okay to expect to get paid. It's okay to expect to get paid for the work that you've done in the service and the quality production that you produce. And that's true also with on-selling. So even if you know that there's difficult times and some of your clients are struggling, it's still okay to sell to them and expect to get paid the right price for you and your business. So still continue to sell as long as you're solving a problem or helping them achieve something. Then it's still okay to sell and continue to get paid. So just talking a bit more about being empathetic. I guess it starts with just talking to customers on it, not sort of close to a personal level, but more an empathetic sort of how are you going, how are you coping in these times, and how is your business going, get an understanding of how they're going, and really just showing that care for a fellow business owner, I guess is really important. And you can do this, I guess, even before going into, if you're chasing up a bad debt, and it's just a great way to start to get into the conversation. If you are chasing a debtor, consider the loyalty that they may have shown you in the past. So if you're chasing a debtor that that this is a business that pays you on time, all the time, and they've been a good business for years, and maybe they're just struggling in the short term, then maybe we can show them a little bit of leniency and have that conversation, as long as they're open to that conversation. But I'm sure in business we've all got those examples of those customers that even in the great times, they're still late to pay, and they still avoid paying you. So maybe we be a bit strict on them. So obviously consider, it's a case-by-case basis when you're considering how to treat your debtors. Number 4, give your customers options to pay and how they pay. We need to be really careful with this. Yes, we want to give options to pay, but you need to consider the business that you're in and how you fund your business. We'll talk a little bit more about that in the cash flow conversion that we'll talk about a bit later. But it's really important, again, that you make sure that you've got your business covered first, and then look at options about how. But before you look at options about how your customers can pay you. Obviously, if it gets to the stage where things are really bad for your customers, then obviously getting something's better than nothing, and getting it in slower is better than not getting it at all. But really, have that backbone to say, no, well, these are our terms and we need to stick by it. Then just do the next slide, sorry, Shannon. And that, so have a backbone. It's okay to be paid for the value that you provide. Whilst your clients and customers may be running businesses, or they're having their jobs affected, you're running your business in an equally challenging time. So you need to make sure that your business is covered first, so that you can continue to be around to help others. We can still have a heart, and we can still be empathetic, but again, when we look at being flexible, always consider what that effect is going to have on your business, and we'll talk more about that and the effect that accepting delayed payments can have on your business, and can be really quite damaging, and we'll go through that a little bit later. Now that we've talked about the 3 mindsets, I want to talk about some real practical. Some more action. Keep me on my toes. I want to talk about some real practical approaches to how you can improve your debtor system and your debt collections. And I think a lot of these things that we can improve, and we can improve these things, and it can really it should really increase your debtor collection, not only in terms of what you get back, but also importantly how quickly you get paid for the work that you do. So it's really important. So I guess if we go to the next slide, the first thing I really recommend is be prepared to have a look at your processes and change your processes and have a think about them. I think the most important thing about if you want to be someone that delivers the best practice in any area, you need to be willing to change your processes and review them over time. So if you're not already, I think most people probably are these days, but if you're not already, have a paperless and invoicing and statements solution, whether it's through Xero or through other software, is really important. Make it really easy for you to send and for your clients to receive their invoices and statements. Consider even having things like a pay now button for, again, depending on, obviously maybe not if you're in construction and building, but for could you have a credit card option for a pay now to make payment a little bit easier. Credit control and flow charts and scripts and templates, we'll talk a little bit about that. That's really just, we're talking about here implementing that system and actually having a system in place. Many small businesses actually don't have a system in place, and that can make your life as a business owner really hard in terms of when you go to chase up debtors, and actually having some of these templates and scripts in place is really important to allow you to know how you're going to approach it. And if you've got a documented rules and systems and a process to follow, you're more likely to follow it than if I'll chase up debtors when I get time. So it's really important to put some processes in place. Credit checks for new customers as well is really vital, to, even just checking, with their current suppliers to see if they're good payers, can be really helpful in weeding out some people that might not be able to pay or might not pay as well as others. Getting paid quicker is really important. We want to get paid as quickly as possible. You've done the job. Most likely, you've already paid for the materials. You've paid your subcontractors. You've paid your staff. You've paid your overhead. So you need to get your money in straight away to fund. Obviously, not only to fund profit, to fund your living expenses, but also to fund your next projects. So it's really important that we can get paid as soon as possible. So the first thing is define payment terms and details at the start is really important, and make sure that you and the client are really clear on what the expectations are. Get it written and signed. A signed agreement is also good, so that there's no arguments. Here it is. Here's the paper document. This is what we agreed to at the start of our project. This is really important. Also, and when you're looking at your processes, consider: do we need to change our payment terms? Do we need to consider going from 14 days to 7 days? If you're in construction and you're doing stage payments, is it possible that we can break that down into monthly payments, so that we can fund our project better and we can get the cash closer to when we're to where we're spending the money can be really helpful. Obviously, it's not right for everyone. You do need to compete in a market where others are offering different payment terms. But if it's something that you can do, it is probably worth considering. Make your invoices easy to understand. This is really important. I had an example the other day. I'm on the committee for my local career club, and the invoice was sent to me, and the bank account number that I was meant to transfer the money was cut off at the end of the invoice. So that's applied. I didn't get their money for another 7 days by the time I emailed them requesting the bank account number. So just, it sounds like a really silly little thing, but if make your invoices easy to understand, the description of the service that you've provided, how much you need, and how you want to get payment. These things are really important. Invoice straight away is another one. Don't wait. Don't delay. Don't I'll get to the invoicing next week or next fortnight. Make sure you invoice straight away. This is really important. First of all, apart from the fact that obviously your clients can't pay you without the invoice, the other important fact is that once you've done the job, that's the time where your clients are going to be most appreciative of your work and going to most understand the value of what you did. If you wait a week, 2 weeks, they've moved on, they've thought about other things, and they might forget the value that you've then provided 2 weeks ago. So it's really important to get that invoice out straight away and give them the opportunity to pay. Sending invoices to the appropriate parties is really important as well. This should be defined in your onboarding process. Make sure that you've got the person, the right email to send the invoice to for payment, so that it might be rather than the director, it might be to the accounts person. So it might be different to your main contact. So make sure we get that detail up front and make sure that once we send it, then we're chasing it up after that. In the invoices, asking for prompt payment is important. We've been talking about be easy to pay. So have the details really clear, have the invoice easy to understand. If it's an option for smaller payments, have the option to pay by credit card. Yes, there's a small fee in charge there, but if it gets your payments to you quicker, then it might be worthwhile to allow that options. And really important to chase your payments. So have a system in place, and this is where we talk about that system is really important, to say, well, okay, when it gets due, we're going to email the client to remind them. Okay, and we've got an example here on the slide where once it's 2 days past due, then we send a reminder reminder email from the accounting software. 5 days we do a more personalized email. 15 days we actually send an email and we notify them that finance charges will be applied if the payment is not received in the next 3 business days. So this is this goes back to making on-time payment worth your suppliers worth the while for your customers. And then having that, and what's that next step of 30 days? Well, we're gonna hold services until the payment is received. Now, obviously, depending on your business and depending on on your customers, those number of days and how you treat that will change. But I think that's really important. Xero actually does this, can do this automatically for you, which is a really good option. And it actually has it where you just set up an email template and it just sends it out automatically without you really even having to do anything once you've set it up. If you are on Xero, I will just comment though that if you're doing that, you have to be reconciling your bank accounts regularly, because if you don't reconcile it, it will be marked as unpaid and they'll send invoice reminders for potentially money that you've received, which can be a little bit annoying as well for your clients. So, but it is a really good option to use, and it's because it does it automatically without you having to think about, which is just really awesome.
Yeah, and I think just on that one too, Paul, I've had on the 30 days with the halting the service, I've seen that quite a bit actually with builders and subcontractors, whether it be the electricians, the plumbers, etc., where the builders have been a bit slow on paying. And I guess from a builder's perspective, I think that's a real challenge, because you need those subcontractors to really be keeping the project going. You don't want a situation where, you know, the plumber gets delayed a week because they've gone off to another job that they're getting paid straight away on. So they've been delayed a week at your job, and then all of a sudden you're out of cycle with, you know, the next stages as well. And I have had a number of clients that, you know, whether it be some of those that are supporting builders, actually turn around and say to the builder, look, I'm actually going to be halting services in a week's time if I don't get, you know, these particular invoices that are overdue. So I think if you are one of those suppliers to the builders, that's something I think I'd definitely be looking at doing. If I was a builder, I'd be looking at the cash flow options, because ultimately the trades are going to want to get paid. And if you can pay them, especially when you've got a shortage on whether it be labour or the subcontractors or you know, the plumbers, electricians, etc., when you've got a shortage, people are going to go, especially as we're seeing a lot of the days overdue is really starting to increase. Xero releases stats on those, and it's really starting to increase. So they're going to go for the one that's actually paying them on a more timely basis. So I think there's two sides of that. But if you are the builder, try and pay them and keep that regular payment coming up. And then if you're actually on the other side and your builder's getting slow, and I'm seeing that with a lot of clients at the moment, that the builders are using the plumbers and the electricians as a bit of a free financing arm, do start to kind of say, well, actually, look, I can get paid net down the road there. Can we, you know, I need to get these invoices paid, or I'll risk, you know, or push your job out a week or so. It's unfortunate, but when you get into a certain point where you've got quite a bit overdue, I had, one of them that kept pushing this particular builder. Now this builder's gone under, and so I think they learned a very hard lesson. They'd worked with that builder for a very long time. So they said, look, no, they'll always be good for it. And maybe that is normally the case, as Paul mentioned earlier, when you've worked with someone for a long time. But you do need to put your oxygen mask on and help your business and help yourself before, in a sense, you're helping some of the others, because you still need to be there.
Yeah, definitely. Next to talk about a guide, so having a guide and scripts, and this goes back to having that process. And if you have a process that defines, well, on this day I'm going to send this email, and this day I'm going to call, and then if you have the scripts there, it really can stop that, I guess, that procrastination from you as a business owner to go, well, I don't really want to do this. It's not a fun part of my job, so I'm always, a business owner is always busy. I can always find something else to do, when you put it off. If you've got that process and that system to follow, and you've got a script there that you can sort of go off to at least get the conversation started, that can be really helpful to actually just prompt you to go, okay, we're going to get this done. It also can also help in that it doesn't actually have to be you as the business owner chasing this. It can be an admin person or another member of your team that you can give them this job and set some really good KPIs about how, if they can improve their numbers and get the data collection improved, and about their job, and something a team member can take over for you, and then maybe just report back to you at certain stages where they might need to get the business owner involved. So having that process and those scripts can be really helpful, and that's something that we can help with. So if that's something that you're interested in implementing in your business, please give Shannon or I a call, and we can certainly help you implement that, because it's just really important. It just helps you get going and get that process moving, so you don't have to sit there and go, okay, well, how do I word this email? You've got a script there. You tailor it. You might tailor a couple of sentences different and change the name, but that's it. It's ready to go, and you don't have to stress, what do I say this time? So I guess in terms of your credit control, making a commitment to the data collection process and getting a system involved, having software automations in place, and again, delegating as much as you can to an admin team member or somebody else in the business is really important. Can really help you free up your time in it, because it doesn't necessarily have to be something that you're chasing all the time. So I think that's really important to have that in place. You know, obviously, if you can, not everyone has an admin team there, but that can be really helpful and frees you up to have, you know, the friendlier conversations with your clients as well, which is really good. Some of the other options as well that I wanted to talk about, you know, there's debt collectors that you can send the debt to and debtor finance. Look, these can be great, particularly the debtor finance can be great in certain times where, you know, you get the money in, get that cash flow if you need it. But it also comes at a cost in that it can be a reasonably hefty fee to get that debtor finance in place. And at the end of the day, you don't want to be losing too much of your sales there, because at the end of the day, that's money that should be going into your pocket. You know, we're smart. We really think that if you're doing the other things right and you've got your credit control, your system and processes in place, and you've got your payment terms right, you probably shouldn't need to use debt collectors and debtor finance too often. Maybe obviously at some point in your debtor process, it might be a case where you do send it to a debt collector if it gets over 90 days or something like that. Or alternatively, you can use the small Australian Small Business Ombudsman, sorry, or the Victorian Civil and Administrative Tribunal, and obviously taking clients to court and things like that. So they are options there. Hopefully, we can keep out of those options if we're doing everything right and if our clients are behaving. But obviously, it is important to know that these options are there if you've got someone who just will not pay. So now that we've given a few tips, I just wanted to talk about a few items, and just to illustrate how important this is and why we spend this time to talk about it, because it's so important for businesses. And just to illustrate with a couple of examples, hopefully that I can make them clear, and we can just demonstrate how important it is and how just small changes can have a really positive effect on your business. So if we start off with the cash conversion cycle. And there's a lot of numbers on this page, but I'll walk you through it. So basically, we've got day zero. That's the day that you buy the material from the suppliers. That's also the day that we're assuming it's also the day that you're going to start work on this job or this stage of the construction. You might have good payment terms in place with the supplier, so you've got 45 days till you have to pay your supplier, but you're also in the process of construction or in the process of your project, you don't actually get to issue the invoice to the customer till day 60. So you've got 60 days from the time you get the material to the time you have to pay your customer. Once you issue the invoice, in this example, we've assumed you would then on an average get a 15 days receipt from your customer. Sorry, the receipt from your customer will come back to you on an average of 15 days after you issue the invoice. So this example is working on materials, and the materials cash conversion cycle you'll see down here. So we've got 60 days from the time we get to from the time we get the material to the time we issue to the invoice to the customer, plus another 15 days to actually receive the cash, and less the 45 days though that we get to pay the supplier. We've actually got 30 days where we have to finance this project on our own before we actually get any cash. But of course, materials aren't our only cost, and it's really important to also factor in that, things like subcontractors, but it can also be wages and overheads, things that you're paying for every week, every month. So subcontractors, if you're paying them every 7 days, then you're starting work on day zero. Then again, you're still not issuing the invoice to the customer till day 60. You're still not taking another 15 days to get payment, but you've paid the subcontractor way back at day 7. So that's 68 days that you've got to finance this project on your own without the customer paying you, and that's every 7 days. So the next payment's going to be a 61-day cash conversion cycle. The next payment's going to be, and so on and so on and so on. I'm not going to embarrass myself because I know I'll get one wrong in the series. So it's really important that can make a real big difference to your overall cash, and that can be the difference. If you can see here, if something else goes wrong, if there's a delay, and there's a delay in the process, and day 60 ends up being day 80, or day 90, and you're still having to pay subcontractors, and you're still having to pay your overheads, you've still got to fund your living costs. not to mention that you've got to find the funds to start a second project, or project 3 or project 4. So this is really important to understand, that where we can shrink this cash conversion cycle is really helpful. So if we can extend payment terms with our suppliers, that's fantastic. If we can issue the invoices to the customers earlier, that can be really positive. Again, we talked about, rather than stage completion, can we do month to month, which can really, if you could convert that day 60 back to day 30, that's really important. And then also getting the invoice out, and getting the payment within 15 days, or can we reduce it to 7? Or, for some people, that 15 days might be 30 days, 40 days. So every person's different. So every business can be different. So, if you think about that and apply that to your business, and this is something that we can help you with. So give us a call if you would like to go through this on a personal basis with your business. And we can actually calculate the number of days, and we can actually calculate even to how much money that's costing you by not getting that money in early, and how small changes can actually be really beneficial for your business. I'm not sure if there's anything that you wanted to add, Shannon, in this slide that I might have missed, or.
No, I think you covered everything. That's good.
Excellent, thank you. Good signs. So the next part I want to talk about this is the business 101 cycle. And this sort of really illustrates what we were talking about before, is that when you fund your first project, that's your money that's going into the project. So it's your money as a business owner. You're buying assets, which is the material, plant and equipment, and so forth, to generate the assets that are going to generate your profit. Now that profit, if you think about the previous slide, that's at day 60 when you're invoicing the customer, that's when you get the profit, but you're still 15 days away from getting any cash. So yes, you're profitable, but you haven't got any cash. So you're still got to wait another 15 days in the previous example till you get your cash, which is then going to go back to the owners, which some of that might go in your pocket for living expenses, the new boat, hopefully, if we're doing really well, but it's also going to going to you to then go funding the next project and the next project and the next project. And that can be, and that's just super important, that if we've got anything in that process that's slowing down that cycle, it can really hurt a business. And particularly, I think as Shannon mentioned earlier, if you've got, because of insurance, you can only run 5 or 6 projects at a time, building projects at a time. If you're not getting that flow through to fund the next project, that can really hurt you as a business. So this is why we talk about this. It's really important. We say cash is king in a business, and it really is. So hopefully that's sort of really clear on that, that cycle of cash and why that's important. And it's at every step. If we can, shrink that cash conversion cycle, it's going to be really important for your business and help you improve quicker. Just want to talk about some specific risk areas just to keep an eye on, and it's not something that necessarily we have to change anything, but just things to think about. So pricing framework, have we got adequate flexibility for variations and price increases? So do we have the ability in our terms of engagement with our client to charge for variations if we have to do extra work that we weren't aware of at the start? Do we have the ability to on-charge price increases if there's significant price increases in, say, timber, steel, or whatever it may be? That can be really important. Ideally, if you can get into a situation where potentially your cost plus a markup, and that sort of arrangement can be even better. Obviously, doesn't work for everyone. I'm not here to assume that's going to work for everyone, but these are things to think about, that if you can move to that sort of area, that can be really good. The source of your income, when I put that down, I mean, consider where your income is coming from. Is it coming from one business, or is it coming from multiple businesses? And that's where you need to be really careful. If 80 or 90% or 100% of your business, your income is coming from one customer, then we need to be really careful that we are getting payments on time, and that customer is not going to go under, because that's obviously going to hurt us if we're particularly reliant on 1 or 2 customers. In terms of supply, we know there's been supply issues. So, do you have arrangements with alternative suppliers if that becomes an issue? And the other thing I wanted to mention is to be your key supplier's best customer. So if you've got 1 or 2 things that you can't live without, make sure that you're the best customer for your supplier, so that you're paying them on time and you're nice to them and you're friendly. And because at the end of the day, if there's a supply shortage and they can only service a number of customers, your supplier is only going to supply their best, or they're going to supply their best customers first. So if you're at the top of the list, that can be really helpful for you. And I think that's really important. We've experienced that, Shannon, with a number of our clients that, who are really good customers, and therefore they've been at the top of the list. Yes, we'll put that aside for you to make sure that you're right to continue. So that can be really important. There's 7 causes of poor cash flow. So we talked a lot about the accounts receivable process, so I won't go back over too much of that. The accounts payable process as well. If we can extend payment terms, obviously we don't want to be a bad customer and always requesting extended payment terms, but where it is appropriate, can we go from 30 days to 45 days? That's reducing that cash conversion cycle that we talked about earlier. So that's really important. Inventory and work in progress process. Can we bill for work in progress earlier, month to month versus stage? How much inventory are we holding at one time? Can we lower that? But also considering that if there's supply shortages, then this is when we need to continue to look at our inventory holdings. If we do foresee an inventory shortage, do we buy more to make sure that we're covered and we continue to fund our projects going forward? Inappropriate debt, making sure that we've got the right debt structure in place. Well, as always, have a look at the overheads. If they're too high, can we make some cutbacks where possible, particularly if you're not getting any value from the overheads, make sure you're cutting that back. Gross profit margin, understanding your gross profit margin. I think every business needs to understand their gross profit margin. If you don't, please give Shannon or I a call and we can walk you through it, because that's probably the most important accounting term that you need to understand as a business owner. The last one, sales too low, that can be a little bit misleading, I find, because often when we're short on cash, we just think, well, the obvious answer is to increase sales. But if you're doing that at the expense of your gross profit margin, you can actually end up in a situation where you're increasing your sales, but you're making even less money because you're squishing your profit margins to get the sales, and your gross profit margin may not be able to cover your overheads. So that's really important. So yes, increasing sales is great, but only if we're maintaining our gross profit margin and keeping our overheads in check. So just be careful not to fall in the trap of, I just need to make the next sale, because that's not necessarily going to help your cash flow situation. In terms of what we can do, and these are some really simple things we can do, and we can do it really quickly to help. You can do it really quickly to help your business. So have a look at your terms of trade and your proposals to make sure you've got the key items in place. Can you review and change some of your terms? Can you shorten the time frame from when you get paid? Look at your billing processes. Is it really easy for your customers to pay you, or is it really difficult? Can we make it easier? Can we automate things so that we're not having to think about it, we're not having to actually action it, it's just happening automatically? That'd be really fantastic. And there's software options out there. Give us a call and we can walk you through that as well. Delegate within your organization to manage the process. Again, it doesn't have to be you as the business owner. It can be an admin member, it can be other people in your business. So delegate that process, put a system around it. So we don't just throw the admin person under the bus and just go, okay, you're now managing debt, and don't talk to them about it. We put the system in place. We give them the scripts, we give them the process. Day 2 overdue, we do this. Day 10 overdue, we do this, and so on and so forth. And we can help you with that process if you like. So, but if you put the structure in place, give them some KPI, I think you'll get a really good result from your admin or other members in your team. Have a look, work in progress, make sure we're billing for what work in progress that we can bill for, and make sure we're not holding inventory that's not going to be able to be used. And again, putting those management controls and procedures in place to manage the debt, and to continue to look at your business as a whole, and setting aside time as a business owner to look at your business, to keep an eye on profit margins, to keep an eye on cash flow, to keep an eye on things like your cash conversion cycle is really important, because things can change very quickly and things can get out of hand quickly if you're not keeping an eye on it. So it's really important to set aside time to continue looking at your business. And again, that's something that we can help with if you're interested. So please give us a shout out if you'd like to.
We've had a few interesting examples over the last few weeks. Just, a lot of you in the construction industry, you're stretched. At the moment, you've got more work than you can even, than you can finish. There's a lot of pressure on that side. So why not use the opportunity to actually increase your prices on it? I've got some that work for some of the very big builders, and often they actually tell them what their prices are going to be. And we've costed some of those out, going back to even what Paul was saying about the sales too low. They've actually costed out what that margin would be. And I've actually said it's not worth taking that project on. You need to push back on them and actually say, no, I can't drop it to that point, and push back on the pricing. And we've seen some really good wins on that. So don't feel like you have to take that at the moment. You need your business to be strong, not just worried about those sales. And some of these quick, I guess these quick runs on the board, looking at your revised terms. I mean, these are great practical things that Paul and I have been implementing, I guess, over the last 2 or 3 weeks or so, with some just more recently with things going on, and it's been some great outcomes from it.
Yeah, definitely. So your next steps, we say do nothing is not an option. Put the oxygen mask on yourself first. Look after your business. Make a plan and really implement as much of this as you can. Obviously, I'd like to think you can implement a lot out of it, but at least even if you pick up 1 or 2 or 3 things, I think you're going to find some real value around that. Surround yourself with experts. I'm not going to build a house. I'm never going to build a house myself by hand, so I would get someone to do that. So please, surround yourself with experts, accountants like us, to help you manage your finances and manage your accounting. And I guess, this is really important. I think we've all been sort of repeating this, over the last 2 years. Focus on what you can do rather than focusing on the things that you can't change is really important, I think. So, yeah, hopefully those next steps there. And next slide, sorry, Shannon. Also, there's business bank assistance if you need it. Think about loans and asset finance funding, temporary overdrafts. We actually have Carly with us who helps with commercial lending. If that's something you need, give Shannon a call or Carly a call, and that may be something we can also help with as well. So I'm not sure, Shannon, if you wanted to mention any more on this topic or no. How we can help you?
I guess, sorry, just
throw you under the bus.
Yeah, one thing just on the financing to be aware of, there are the COVID recovery loans. Now, a lot of people would think that the COVID recovery loans are only if you had JobKeeper through to the very end. That was the case. That's now changed. So the COVID recovery loans are really something to think about. It means the government's backing 50% of the value of the loan. So you actually only have to, in a sense, when you're looking at secured financing, you've already got 50% covered. Those loans are approximately 5 to 10 years, and you can get quite sizable amounts on that. So we've had a number of clients that we've been able to get these loans through now that you don't actually have this requirement of that long-term JobKeeper, which I don't think we had hardly any clients that were in that situation. So if you do need that next level of kind of some funding, that might be an option for you, because it's a really competitive interest rate, but it's not having security for 50% of the loan, which is really helpful for you.
So how we can help you, there's a number of options. Firstly, if there's something that is specific that you want, or if there's something more of a bespoke thing that you want to talk about, we can obviously help with many situations. Some of our more popular things obviously includes a cash flow forecast, where we go through your cash conversion cycle, and we actually map out where your cash is likely to be over the next 12 months and where some pain points might be, and we can talk you through how to best manage that. And there's also our quarterly and monthly coaching and reporting that can really just help you get a handle on your finances, getting a handle on your business, and understanding things like profit margins, things like the cash flow conversion, which is really important. And it's something that needs to be managed on an ongoing basis. And if you can get out in front of things early, I think you can have a much stronger business and improve profits and improve the business value and improve your overall wealth. And even I know some of my coaching clients, even just helping them work through some processes so they can get some time back, and they're spending less time in their business but still have the same profit value. So we really feel strongly about this, that we know we can help people. So again, reach out if you want to ask any more questions, because we're here to help and we're keen to help. Is there any questions, Shannon? You're on mute, Shannon.
I am. So you love that saying, you're on mute. One that says thank you, so that's good. Yes, and the slides will be sent out as well. Someone wanted a copy of the cash conversion as well. We don't have any actual questions, just another thank you. Yes. Do we have any other questions? feel free to send it. You can even do it anonymous if you want. You don't have to do it with your name. If anyone has any questions.
Feel free to reach out tomorrow as well if you want to contact in more detail and have that private conversation as well.
Yeah. No, that's great. Well, thank you very much, everyone, for joining. I hope you got a lot out of that. It's a bit of a crazy time. I was pretty nervous when I saw Probuild. Just as a sign, I mean, it's not great for the economy and market, just, you know, to have that kind of situation arise. So do reach out if you've got any other questions. And I hope this has been of help for you all. Thanks very much, everyone.
Thank you.